everyone, John Henry here, slingshotfutures.com, and welcome to the Daily Futures Market Outlook, where we take a look at our big six markets and formulate an attack method for tomorrow's trading. And tomorrow is going to be the 19th of April. Welcome back after a long holiday. Hopefully everyone got to rest up a little bit and got to spend some time with the family. Hopefully the weather was nice by you. I know by us it was actually pretty good, so I won't complain too much there. Now, before we start jumping in, as always, a couple things to make sure of. Swing on over to the website, slingshotfutures.com. Scroll down and click on the Join the Daily Outlook newsletter, and that's going to add you to our email list so that you'll know every single time one of these videos comes out. Along with the newsletter itself, we also talk about different stocks and different statistics and different things that are going on as well, so a great newsletter to get your hands on. Along with that, at the bottom of the page, every single day we post market psychology videos going over one specific market and just ripping it apart and figuring out why it moved and to better ourselves for future trading. And then, of course, we also have our daily live trade room prep levels. We do those every morning as well for the Big Six to get you all locked and loaded. If you haven't done so already, make sure to click on the live trade room subscription and trial info and sign up for a day trial and see what we're all about. If you really like it, you can always subscribe. And if you really like it, you can join the VIP membership, which has the live trade room included, along with all of the course material that you'll need to get going. Now, starting off, we have the Bund, which for the most part is fairly range bound. We ended the day with a nice bullish move into a slight little wedge. I mean, overall, we didn't really get a whole lot accomplished, but on the daily chart, it's going to be one pretty big wick. We opened up here, and we're going to close right there. The daily candle is going to look like this with a big bottoming tail. So with that daily candle being slightly more bullish than bearish, a little bit of a fade off of the highs, there is more of a sentiment for the buyers. Overall, though, we don't really have a huge benefit to be a buyer more than a seller. It's a little over 50-50, right? Now, we made a new low, into a new high, into a new low, into a new high, into a new low, into a new high. You can see we're expanding. So with that expansion, the buyers are the last ones that showed up to the party with a big move. And a lot of times the one that has the biggest move is going to win the follow through. So I am looking for a secondary leg to the upside, and we do have major upside objectives up at 164.16. And that's where I'm looking for the market to want to go to. Now, are we going to go there all in one shot tomorrow? Maybe. It's definitely not out of the realm of possibility. But that said, it might be a little bit grindy given the overall range sentiment that we've had. With the new low, new high, new low, and just back and forth like that, a lot of times it can get kind of grindy, and it wouldn't be a surprise at all to see us go range bound at the open, maybe gap down into support tomorrow morning, and then get the rally higher. But either way, still looking to be a buyer here, looking for continuation up. I'd prefer to be a buyer underneath 163.82 if possible. May not give you that option, but that's kind of what we're looking for at the moment. On the euro, really nice continuation to the upside. We had a strong spike into a wedge, and that spike and wedge actually broke out higher and made a new spike and wedge. So we've got a lot of bullish momentum working here on the euro with a major upside objective at 77.03. Not to mention the fact that it's 7,700. So we've got a lot of big kind of levels all stacking up at the same place. We're definitely looking to be buyers, but we're pretty top heavy. After having a bull rise higher like that and then going into a wedge, the sustainability aspect of them breaking out higher and continuing is low. That only happens maybe 30% of the time or less. So the fact that they aren't really in a sustainable situation, and then we break out higher and do it again, if we can get another breakout to the upside, I would be looking to heavily fade it, in all honesty, just because of the lack of sustainability in that kind of movement. It's too much, too fast. Now, overall, we do still have some upside objectives, not too far away anymore, but I would love to be a buyer on a pullback, if possible, to finish that off. Now, a pullback in this case, I mean, we might be in the pullback area right here at 7,600, and that's all that you end up getting. Doesn't really give you a whole lot to work with. I would prefer to see a pullback down to 75.11 and then look for a buying opportunity around there to push the market back up to finish that job off at 77.03. If they don't give you that pullback, then we do have 73, 77 a little bit further down. If they do give you the pullback, that is, for a slightly better area of interest. But again, the overall interest is buy side until we get this major objective filled. And if we get a big breakout to the upside, likely going to be seen as unsustainable movement, and the market may look to try to fade that kind of move. Over on gold, man, most of the day they really didn't do a whole lot. It was a mess on gold today. You can see this just really well-defined range. They just bounced back and forth over and over again. They tried breaking out through the upside, failed, pummeled down to the lows, and failed there, and pummeled right back up to the upside. So we have a huge amount of back and forth going on here on gold. And overall, again, usually the breakout happens with the one who comes with the biggest amount of force, and that happens to be the buyers right now, basically completely shutting down that sell breakdown with a rip back to the upside. So with this massive run to the highs, we're looking for a pullback. We want to be a buyer. Major support right now at 91.2, which is a nice place to start looking for possible longs. That said, I wouldn't necessarily mind catching a little bit of a deeper pullback. The sweet spot for me would be between 89.3 and 88.5. I'd love to see a pullback down into that area to find some buying pressure back up towards the highs. Given the ranges that we're kind of moving out of, we seem to be kind of traveling in ranges. We have short-term ranges here. They break out, another one there, another one there. Now we're seeing more here, more here. This could all just be one big range up here, which wouldn't be a surprise at all. Now that means that if we are going to be looking to buy low, I'm not going to be looking for a target back to a new high because it's going to be a difficult scenario. Why try to trade through the highs of a range when it's that well defined? So 93.9 would be the target area for me to try to look to get some of those contracts off the table. Over on the bonds, we have a nice rally to the upside, very strong to the upside. Quite a bit of a different picture than gold, and generally gold and the bonds and all of those move together, but the bonds much more aggressive to the upside, and the buyers really not letting off the gas pedal. In this case, we're rounding off the end of the day with a big rally with a huge bull candle at the very end. This is the biggest bull candle that they've seen really for most of the day, if not the entire afternoon session, until back here at around 10 o'clock. So with that amount of bullishness, we have to assume that the buyers are exhausted. They likely all took their profit right there, thinking that it was a gift from the market gods. Now, in this case, with the buyers getting out of the way, that tells us that they're looking for a deeper pullback. So I'm going to be looking to buy it around 154.28 to 154.24, and that's going to be the nice area to try to jump in for another attempt at the highs. Given the buyers aggressively liquidated up here, causing a sell pullback this far down, I wouldn't necessarily want to look for a high in terms of a target. I would want to go ahead of it to around 155, we'll say 155.12, just to get a little bit ahead of that high and make sure that those targets get filled. Now, again, the overall upward momentum is still there. We definitely want to be buyers, and the buyers own the market, but it's pretty obvious that they weren't so interested in the highs anymore and they liquidated. So because of that, we have to play it a little bit safe for targets and a little bit safer on the buy side as well, just trying to get better entries. Looking over on crude oil out of all of them did probably the least. It had the most movement, as crude oil tends to, but really on a daily chart, this is what we look like, right? I mean, look at this thing. This is there is a lot of wick on the lows, but there's also wick on the highs, and this is a bear candle, right? So just a terrible looking daily candle to fire things off here on crude, and overall they really didn't get a whole lot done. We did have some news out of Russia that caused the market to bounce around a little bit here, but for the most part ending kind of flat and not really getting a whole lot done. So because of that, we have the extremes marked up, 53.25 up to 53.30, the lows 52.61 to 54, and we're just looking to play those. Staying out of the middle as much as possible is going to be a necessity when you're looking at this type of environment, because the middle just gets chopped up like crazy, and we can see that that happened over and over and over again. Now, there was a lot of nice moves. Had they, not been on news, it would have been a lot easier to trade. So we're kind of stuck in the middle right now, and we need to wait. So looking to sell the highs, buy the lows, stay out of the middle here on crude. And then finally, the S&P 500, overall, slight bearish tone to it. Again, another one of those markets that's sort of showing traveling ranges. We had a range in the early morning session. They broke down, little range there. Kind of back and forth a little bit, which in all honesty could just be one big range right here, and then also another one right there. So with all of these ranges all over the place, again, we're looking to buy low, sell high, but we do have a slight bearish sentiment. So because of that bearish sentiment, really what we're looking for here is to find a place that makes sense to become a buyer, right? Right now, where we are at this very second, we're kind of in the middle of nowhere. I would like to see us dip down a little bit further than that 35.5 area at the very least before I start consider buying. And again, we do have a slight bearish bias, so I would almost rather see them pop higher to hit that 41.25, maybe even 44, sell up here for the move down, which makes a lot more sense. Now, there is possibility possibilities of buying down here at 35.5, 32.5, 30.25. But again, with the slight bearish sentiment, I wouldn't necessarily mind buying a little bit underneath those levels, assuming that the sellers have a slight edge and they may be able to break them down a little bit. Either way, mostly a range, looking to fade the range, buy low, sell high, stay out of the middle, and unfortunately, we're right in the middle here as well. So that's the outlook and what we're looking for. Now, for tomorrow's news, we do have some news coming out. Obviously, the CPI year over year is coming out tomorrow for the European side of things. That's at 5 tomorrow morning. The forecast, 1.5%. The previous was also 1.5%. We have crude oil inventories coming out tomorrow as well at 10:30, and the forecast for that is negative 1.470 million. The previous was actually a big surprise, negative 2.166 million. They were forecasting a positive. So it'll be interesting to see what they want to do here. Going into, just the overall movement. What are the news items going to look like? We have API coming out in about a minute here as well. So with crude oil inventories and the API, generally the API is a little bit more accurate. So we'll look to the API to see what that wants to come out as. But outside of that, overall, mostly ranges with a little bit of a bias on either of the markets. But that's going to do it for this one. Like we always say, make a plan, trade the plan, follow those rules, and you'll do A-okay. Until next time, have a good one.